Hi guys, so I just wanted to do a high-level presentation on what is Forex. I'll be very brief and precise. So what we're going to cover is what is Forex, what is traded in Forex, what are currency pairs, who or what moves the Forex market. So Forex stands for foreign exchange. It's the global financial market that allows currencies to be traded. If you think one currency is stronger versus another currency and you end up being correct, you can make profits in the Forex market. If you have exchanged your country's currency to another country's currency, then you have participated in foreign exchange. It is based off the exchange rate of two currencies from two different countries. The changes in the exchange rate allow you to make money in the Forex market. It is the largest market in the world with over $6 trillion being traded on a daily basis, 24 hours a day, 5 days a week. Foreign exchange traders buy and sell currencies in hopes of making profits from their speculated trades. So let's look at what is traded in Forex. So these are the major currencies that are traded. These include the United States dollar, the European euro, Great British pound, the Swiss franc, Australian dollar, Canadian dollar, New Zealand dollar, and the Japanese yen. These are the most traded currencies and some of the most liquid currencies. So what are currency pairs? So currency pairs are the major currency pairs that we look at are the euro versus the United States dollar, United States dollar versus the Japanese yen, Great British pound versus the United States dollar against the Swiss franc, United States dollar against the Canadian dollar, Australian dollar against the United States dollar, New Zealand dollar against the United States dollar. The majors are the most liquid in the world, which means they have the most activity of traders buying and selling these currency pairs. The more frequently traded pairs, the higher the liquidity. This is the comparison of one country's currency value relative to the other. So for example, GBP USD is the value of the Great British pound relative to the United States dollar. If a trader speculates and says that the Great British pound is stronger than the United States dollar, then that trader would be essentially buying the Great British pound and simultaneously selling the United States dollar. So let's look at what moves the Forex market, or who moves the Forex market. Markets are moved by the super banks that determine the exchange rates. These are the largest banks in the world. Based on supply and demand, they will generally make the bid, ask, and spread prices. I'll get into more details on upcoming videos about some of these things. This is just the high-level version of what Forex is and how the Forex market moves. These large banks or interbanks take on a large amount of Forex transaction and create the flow of the market, making them the market maker. So I'll also do a video on the market maker as well, and order flow and things like institutional trading and smart money concepts, but that will follow in the next videos. Large commercial companies also take part in Forex for the purpose of doing business. For example, Apple would exchange its dollars to buy electronic parts supplied in Japan using Japanese yen. The volume of the trades require them to use commercial banks, and mergers can cause exchange rate fluctuations that move prices up or down. Governments and central banks also participate in Forex for their operations, international trade payments, and handling Forex reserves. The adjustment of interest rates to control inflation can affect currency valuation as well. And lastly, we have speculators like myself. Although their opinions may not move the market as much as the above mentioned players, speculators make up 90% of the trading volume. They focus on price fluctuations and participate in buying and selling currencies. So that's just a brief and precise high-level presentation on what Forex is. Hopefully you got some value out of this video. Tune in for the next videos as I continue with the free course. Thank you.